Thank you for joining Sonar 201 Train today. My name is Donnie Gilbert. It's 3:30, so let's go ahead and get started. I've been in logistics about 16 years now. Started back in 2004, and I grew up mainly in the spot market, quoting on-demand capacity. So if I was lucky, my most of my loads picked up. Probably 80% of my loads picked up same day. And if I was lucky, they'd maybe pick up the next morning. So I can definitely say that I grew up in the spot markets. Today, we're going to talk about a lot of the indices that are in Sonar that I would have loved to have had over these years when I was quoting freight and booking freight with carriers. We're going to discuss the outbound tender volume index, Headhaul Index. Uh, we'll do both inbound tender volumes and outbound tender volumes. And we'll look at, we can break this down by drive in as well. And we'll look at outbound tender rejection rates, inbound tender rejection rates, breaking those down by drive in and reefer. And if we have time, we'll try to jump into tender lead times and wait times. So let's go ahead and get started here. When you first enter Sonar, of course, you'll be up here on some global pages. You will need to start a new page down here so that you're able to change the information on these pages. On our global pages, they are frozen, so you can look at the information on them, but you will not be able to change them. So here we'll go down here first to add a page. And we will create a page name. I'm going to put Sonar 201 Training. And I'll go ahead and select here where I've got map, and I'll save it. And when this page pops up, it's going to be blank. We get here, we see that it's blank. Up here in the top right-hand corner, this is where I will add the actual pages that I want. And I'm going to start off today here. I'm going to go down, I'm going to do our 3D maps. Select our 3D maps. We're looking at maps first. Hang on here, get it selected properly. There we go. We selected our 3D maps. And this gadget right here, I will open up. I'm going to turn on the highlight border so I can see the different 135 markets in our maps. I'm going to show detail on hover. So when I hover over a market, it'll give me the market names. And then when I go into map layers here, I'm going to start out. I want it on all the 135 markets. And I'm going to start in our most popular trucking indices. And I'm going to select outbound tender volume index. Select here to scoot that over. Select here to make it a little bit wider. I'm going to press zoom in here a little bit. So outbound tender volumes. This is a measurement. It's of our electronic tendered volumes across the U.S. We indexed this market on March 1st, 2018. It wasn't a peak market at the time. It wasn't a low market or a peak market. It was kind of a mediocre market. And that's where we set the index at 10,000 for national volume levels on March 1st, 2018. And of course, we've cut it loose from there, having markets, of course, increase and decrease. Now, we've broken this down by market share into 135 different markets across the U.S. Breaking it down to an index. This index does not tell you how many loads are in the market or how many trucks are in the market. It is an actual index that we thought was a better measurement that we can see how markets increase or decrease in tendered volumes. Here I brought up, I'm going to start out here on a map. And what's good about our 3D maps here is down here we see the legend down here. As the volumes increase, you see it starts turning darker shades of blue. So those lighter shades of blue are the smaller markets, and the darker shades of blue are the largest markets. Of course, you got Southern California that are very large markets. You have a lot of markets up here to the Midwest around Ohio and Chicago. Harrisburg, PA, that's another one of the large markets. Atlanta, Memphis, and of course, Dallas. So by looking at these maps, this gives us a high elevation look of what is going on with outbound tendered volumes throughout all the markets. It lets us know where the freight is. This is really important to large carriers because this lets them know where they should aim their trucks because they're more in need right now of keeping their trucks moving. So they want to run their trucks towards the larger markets because there's a lot more freight there, giving them a higher probability of turning their trucks around. So we look at maps, and of course we have these maps for all of our indices, outbound tender volumes, inbound tender volumes. Inbound tender volumes is a similar map like this, but it lets us know where the loads are going to as opposed to where the loads are coming out of. Tender rejection rates you can bring up, drive-in tender rejection rates, reefer tender rejection rates. There's a very large list here when you select our 3D maps of what indices you can and can't pull up. And like I say, using the color gives you a high elevation overview of what's going on. Now you can also double click on the map, and it'll bring up all the indices for that market here. Let's go ahead and expand this. If you want to just kind of look very quickly, this will give you all the indices of the Salt Lake City market that I've clicked on. If you want to scroll down, and they're in alphabetical order. Next, I want to bring up and build a chart. So I'm going to go back and I'm going to add a page. Let's open this up here where I can add a page. I'm going to put SONAR 201 chart. And I want to look at all this information under a chart because this is actually where I get a lot of value out of SONAR, is really being able to break these pages down or break these markets down in a chart. We pull it up here, it's a blank page. So I'm going to go up here to the top right, click the blue plus sign, and I'm going to select chart. I'm first going to start out with our national volumes, OTVI.USA. And this is just to show you here, this is the index here on the right. Right now, today, we're at 98.76. So we're just below the 10,000 mark where we indexed this on March 1st, 2018. We're about 1.25% below that freight level right now. We saw it well above 2018 levels right up until this decline here that happened in the very first week of November. But we're building back up here. Of course, next week's Thanksgiving, so we're expecting volume to pick up here just before the holiday season. Down here on the bottom, these are our dates. So we see this map is going from the end of October through the month of November. And you can click on 1 month, 3 months, 6 months, or 1 year. Now, another really cool feature here is up here in display. First of all, I'm going to just scroll down here and I'm going to turn it on large font so it makes the map just a little bit bigger. And I also want to show you here our previous years. I'm going to go back to 1 year, and then I'm going to select show seasonality. And this right here, I'm going to click full year. And it's going to show me, let me turn my large fonts off here, what's going on throughout a full year compared to 2018. So the blue line right now, this is the volumes in 2017. And the green line is the volumes from 2018. You can see here during the first part of the year, 2018 was outpacing 2019. And then right around, I think it's July 22nd, we had 2019 volumes peak up and go above the 2019 volumes. These big dips that you see right here, these are holidays. Memorial Day, July 4th, Labor Day, and of course, this is going to be Thanksgiving. So this is just kind of a rundown of how you can view our volumes on a chart. But more importantly, we can look at these volumes on a market by market level. For volumes, our indice code is OTVI, and you can learn these codes in our help center. If you go over to the top right and click the question mark with a round circle, go to our knowledge center, select indices by category, and here will be listed all the different indices that we use in SONAR. You can click on these indices and it'll describe in a lot of detail what is going on with these indices. What is the indice? Who's it important to? So today we're going to be actually looking at indices that are in the market volumes and on down here in trucking supply and demand. We do have maritime, rail, So if I click on tender volumes index, what is it? Who's interested? What does it tell me? And you'll see our indice codes here. For an example here for Albuquerque is OTVI.ABQ. We use airport codes. So when I bring up an indice, I will type in the indice code, OTVI, a period, and of course, like Atlanta that I've used, is ATL. So here we brought up Atlanta, and this gives me the tender volumes for the Atlanta market. Here through the latter part of September, you can see how they've dropped down. And then here, pick back up through the second week of November, and right now they're trending downward. And what's important to learn about these charts, it lets us know the changes in volumes and which direction they're currently trending in. So currently Atlanta has trended downward. It's kind of flattened out, and again, it's of course trending downward. Atlanta's a market this year that's actually become very close to almost a backhaul. It's a consumption market, we call it. It's has a lot more inbound trucks this year over last year than outbound freight. So it's consuming more products and it's actually moving out of the market currently. In this category, of course, I explained that we have our index here on the right and our dates on the bottom. We can also compare markets or compare other indices. OTVI.MEM, which would be outbound tender volumes from the Memphis market. And of course, it'll pull up here in red. So now we have the Atlanta market index right here in the blue line on top. And of course, the Memphis market down here on the bottom. Memphis has 165.93 index points for their outbound tender volume. So we know it's, a little bit more than half the size of the Memphis market. So when you're comparing the same indices up here in display, you can compare them on an absolute axis style, or you can bring it over to a dual axis. And since these markets are quite different, I'm going to actually select the dual axis. So here it's going to give me on the right-hand side, this is the main indice axis for outbound tender volumes for the Atlanta market. And when I compare them to the Memphis market now, it's going to give me another set of axes on the left-hand side, and this is the one that we're comparing to. So this is the Memphis market. And of course, on the bottom again is our dates. So again, we can see how the ups and downs compare between the Atlanta market and the Memphis market. Here, the Atlanta market has trended downward over the last few weeks, and the Memphis market is actually starting to trend upwards. So again, a lot of information on what's going on in volumes. If you want to as well, we could exit out and look at the inbound tender volumes, ITVI.ATL. And here we have the inbound tender volumes. These are loads that are delivering into the Atlanta market. And you see here, they're actually trending upward. So inbound is 422 index points, and the outbound is 379 index points. There is more inbound than outbound. So that will lead us into what we're going to look at next, which is our Headhaul Index. Our Headhaul Index, we've actually taken the inbound or the outbound index and subtracted out the inbound index. So our indice code is HAUL for haul. And let's look at ATL again. You see here, it is trending downward to negative 43. And of course, the reason it's a negative is because OTVI.ATL is smaller than ITVI.ATL. Now, this is important because here the split is what becomes the negative 43, which is the 379 minus the 422. And this is important because it helps us measure, help us understand the capacity issues that are happening in a market. Here in the Atlanta market, again, with being a negative number, it tells us there's a lot more outbound than inbound, so therefore that can really impact the rates. And of course, when you have more trucks than loads, it's going to push the rates downward. So the head haul market here, understand capacity, outbound minus inbound. And you can also compare the head haul index, of course, with different types of markets. Going forward is we're going to look into one of my favorites. Actually, I want to bring up one more thing with the head haul market. I'm going to swap over here to our map. and we were looking at outbound tender volumes on the map, I'm going to change it over and show you what a map looks like for the Headhaul Index. With the Headhaul Index, you will see a lot of reds and a lot of blues. And the reason is the reds are the backhaul markets, which are in red, and the blues are the headhaul markets, which are positive numbers. Down here on our legend, you'll see where some of the highest markets, of course, Phoenix and Florida, are dark red because they are very, very large backhaul markets. When you're examining markets on this map and you're looking at a map like Southern California, look at the surrounding markets. And of course, understand if you see red that's surrounding these markets, that can tell you that you might have load or truck drivers deadheading into your market. Here we know that Phoenix, Arizona is a negative 82, and Southern California is a positive. It's a very high positive, very dark blue number here. And we know that we will have loads that are deadheading from Phoenix into the Southern California market. And that can also affect the capacity because we do not measure deadhead in our Headhaul Index since we're just measuring the inbound versus the outbound. So whenever you're using this, always kind of look at your maps and look at the surrounding markets. Here, Savannah is 56.06. That's a Headhaul market. And below it, you have a lot of these markets in Florida that are red, negative 11 there in Jacksonville. And a lot of these trucks will move north into the Savannah market and possibly all the way up to Atlanta, which is also another backhaul market still. But that'll let you know that these trucks will be moving from the red to the blues. Now, the next index I'm going to talk about, outbound tender rejection rates. This is probably the most important index that I would use if I were still being a broker. And the reason is because it correlates very close with spot market rates. Going here to my knowledge center, I want to scroll down and kind of look, and I urge everybody to read up on outbound tender rejection rates in the knowledge center. It's under trucking supply and demand. Tender rejection rates. Tender rejection rates measure the willingness of a carrier to run a load out of a market at contracted rates. And it's very important to understand that. We measure the rejection rate to understand the percentage of loads they're running. So if they're accepting 95% of the loads, we have a 5% tender rejection rate. And the reason most of your carriers are going to reject a load is because they're able to use our equipment and get another load at a better rate. So as we read through here, we see that our indice code is OTRI. And of course, we have inbound and outbound and inbound. And we also break it down by trailer type, dry van, reefer, and we have flatbed on a national level. And we also break it down by lane, city or local being the city, short haul, which is 50 or 100 to 250 miles, mid haul, which is 250 to 450 miles, tweener haul, which is 450 to 800, and long haul. So we're able to break these lanes down and understand by what's being rejected. We are able to understand the movement in spot market rates. And this is because by looking at tender rejection rates, this is actually a reaction to the market by carriers. And that's what makes it really important. So definitely look this one up and read through it because there's a lot of information to help you understand. I want to start off tender rejection rates actually on a chart. If I bring up OTRI.USA, this is the tender rejection rates on a national level for all trailer types. And of course, we can see here on the right-hand side, we have the percentage. So 6.16% of loads were rejected. It was yesterday because our information is 24 hours old. So that means about 94% of the freight was accepted, which is actually fairly low. Well, it's a fairly high number of an acceptance rate, but it's a very low tender rejection rate. And that's indicating that here lately, our spot market rates for the markets in the U.S. have been fairly low. If we draw back a little bit and kind of go from August throughout the middle of November, you can see here they've trended upwards here as we entered the fourth quarter. And of course, you can see how low they were back in August. They peaked here for the 4th of July. And you can really see the struggles of our tender rejection rates, which indicates the struggles that we've seen in the spot market. I want to compare this to DAT VF.VNQ. And what I brought up here in the purple line, this is the long haul average rate that's posted by DAT here. And I want to back out to about a year here. And the blue line is the tender rejection rate that's posted by FreightWaves. And the purple line is the long haul national average for long haul freight that's created by DAT. And what I want you to see here is the peaks and the valleys, they match. As the spot market rates that's posted by DAT increase, you see the increase in tender rejection rates. As the DAT rates go down, you see how our tender rejection rates are going down. Now there's a little bit of a gap in between these lines, but that's because we're comparing a rate per mile to a percentage. So as we zoom in and see, using our tender rejection rates, we can understand what's going on with rates in the spot market. Now I want to get down here to the last 7 to 10 days, because this is what's really important and where you can really find value using tender rejection rates versus just a regular rating tool. You can see here the 13th is the last day where the average long haul rate by DAT is posted. And that's because using a rating tool, not just that, any rating tool, your rates are normally 7 to 10 days old. And the reason that is of course, they collect the actual data of completed loads and use the average rate per mile. Well, of course, you book the load. The load may pick up the next day. It takes a few days to run the load. The load delivers. Driver has to mail his bills in or scan the bills in. The corporation has to enter the information in, and then of course the data team sweeps the information. They then have to wait for a large enough sample size before they can post that rate. So you see it can take 7 to 10 days. Well, by looking at just what's happening with our tender rejection rates, we can see the direction of spot market rates using tender rejection rates alone, which gives us about a 7-day advantage. This advantage right here, of course, you see where tender rejection rates have moved up. In this case, you might be, if you're using just a rating tool, you could be underbidding your freight. So it's very important to look at what's going on in the last 7 to 10 days, because your rating tool here shows the market rates going down, and they've actually picked back up in the last 7 to 10 days. Of course, in the other instance, if the markets had dropped down, you could be overbidding. Therefore, you're not even going to win the freight. So using this and looking at the last 7 to 10 days will give you the information you need to know in case you might need to increase your bids or decrease your bids, either one to increase your revenue or increase your win percentage. Let's dive into a market here. Looking at ORTI.DSM, Des Moines, Iowa. We see here over the past few weeks, 3 weeks, where Des Moines has been pretty well flat, up and down a little bit, but around the same area, 16, 17 index points on their outbound tender rejection rates. So the market not moving very much. But here, we recall that the 13th was where our rating tool was. In the last few days, we've gone from a 17% tender rejection rate all the way up to a 21% tender rejection rate. And what does that kind of mean? When I talk about tender rejection rates, normally 0 to 3%, with being that low, that kind of tells me that spot market rates are below contracted rates in a market. About 3% to 7%, depending on how you price your contracted rates, that could be just below, right at, or just above contracted rates in a market, whether you bid high or you bid low. When we're getting above 7% in a market, that's kind of telling me that spot market rates are getting above contracted rates. I get excited when tender rejection rates get above the 10% mark. So here we're already above the 15% mark, and it's moved all the way up to 21%. So a little bit less than 80% of the loads are being accepted in that market. And this shows upward movement in the spot market rate, in the spot market for the Des Moines area. So here, drivers are rejecting their contracted loads, and they're moving to pick up other loads. Therefore, we see the tender rejection rates at a contracted level. if I want to, I can actually break this down by both dry van and reefer. V for van, OTRI.DSM. And R for reefer, OTRI.DSM. Now we got the green, this is van. And of course our OTRI, this is all trailer types together as an average. We'll break it down by dry van and reefer, and we see a little bit of a different story. Here we have dry van at 19.42%, also trending upward. So you still see the upward trend from the last few days. But reefer tender rejection rates are a lot higher in this market. So if you're looking at this from the 13th, reefers jumped from about 25% to almost 31% in the last 7 days. So here again, you can break it down by dry van and reefer, and with reefer having almost a 31%, that's about 69% of the reefer loads in the area are only being accepted. So we see even a lot higher movement in tender rejection rates for reefer. So looking at tender rejection rates, break it down by dry van and reefer, and you can see a lot more and understand what's going on with spot market rates in these markets. If you want to, of course, you can compare this to, we could, if we wanted to, OTVI.DSM. We could bring up the volumes in Des Moines, and then we could bring up VOTRI.DSM. We could bring up dry van tender rejection rates and reefer tender rejection rates and look at volumes compared to their rates. This is what I wrote in our daily watch this morning, was the Des Moines market. So you can bring up one indices. So it's here on the right with our index, and here on the left are the percentage of our tender rejection rates. And that's one good plus for our SONAR charts, is being able to compare different data types within either a market or market to market or within a market. So keeping on the Des Moines, I want to look at also the lanes. When I look at the tender rejection rates by lane, this is different lane lengths, and the trailer types are all the same. So I'm going to bring up first our COTRI.DSM. I need a TRI.DSM. There we go. And then I'm going to compare it to SOTRI.DSM. Our short haul, MOTRI.DSM. Our long haul or mid haul, TOTRI.DSM. This is our tweener haul, and lastly, LOTRI.DSM. Again, local is 0 to 100 miles. SOTRI, that's our short haul, that's 100 to 250. Our mid haul is 250 to 450. Our tweener haul is 450 to 800. And of course, our long haul is 800 plus. So now we can look at our an average of the outbound tender rejection rates. We can break it down by dry van and reefer. And now we can also break it down by length of haul, which is very important. Now, these are not by reefer or dry van. This is the average rate. But you can see which lanes are carrying the highest rejection rates. And of course, here we see the local runs are only 12% tender rejection, which is still kind of elevated. But your short haul is 25%. So this is a lane that's kind of not as well accepted by carriers as the other lanes. So it's carrying a pretty high rejection rate. Mid haul as well is carrying a 24% tender rejection rate. And looking here at our chart here, we can see the green line. That tender rejection rates for mid haul loads have jumped up in just the past 24 hours from around a 18% tender rejection rate up to the 24.34. So we see a lot of upward movement in spot market rates alone on the mid haul lanes. Now, tweener haul, this is a pretty important lane that we look at right here, and because we use this as a key indicator for what is going on in a market. Tweener haul is 450 miles to 800 miles. It's that lane that's not a good lane for drivers because it might take them about a day and a half to run them now with the new ELDs, and it might take them about 2 days to deliver. So the utilization for the truck is very low on these types of lanes. So when we have these lanes available, carriers are going to try to pick either the short haul, the mid haul, or the long haul loads over the tweener haul loads because those lanes utilize their equipment a lot better. Unless those lanes are not available, then they'll start accepting the tweener haul. So if you see a very, very low tweener haul tender rejection rate, that means there's not many options for the carriers. Therefore, they're having to accept the tweener haul loads. When you see tweener haul loads start picking up, you see that their options are opening up. They're able to accept different types of lanes in the mid-haul and long-haul range, and therefore that shows us that they have a lot of options out of that market. Looking at a 17% tender rejection rate for the tweener haul in the Des Moines market, we can definitely tell they have a lot of options with mid-haul, short-haul, and long-haul loads. So they're not really nailed down, and when you have a lot of options, that's going to push carrier rates in an upward direction. Long haul, 19.94%. Again, only 80% of the loads are being accepted. We see here in the yellow that the line is moving upwards. We have our spot market rates, even for long haul, all pushing for all these load types in an upward direction, of course, except for the local. You see it's actually dropping down here. So break it down by dry van or reefer, break it down by lane length, and understand what is going on with spot market rates in a market. Is it dry van loads picking up or reefer loads picking up? Is it the short haul, mid haul, tweener haul, or long haul? Are they trending upward as well? And this can help you, use your rating tool and adjust your rates properly to maximize your revenues. Now, moving on, let's kind of take a quick look at our volatile markets map. I'm going to add a page here again, and I'm just going to put VOL MAR markets map. One big question that always comes up is, where do we start? And I actually like to start either with the US maps, looking at volumes or tender rejection rates, or I may jump in here and look at our most volatile markets map. I'm going to save the map right here. Creating a new page, it'll come up blank. Go to my plus sign here and scroll down at the very bottom, most volatile markets map. These are all selected. I'm going to keep them all selected, and I'm going to save it. Now, this is set up to bring us here all the list of all of our market names, our airport codes for each of the markets, our U.S. market share percentage, and of course we have outbound volume volatility. This is our OTVI index. Outbound reject volatility. This is our OTRI index. Head haul volatility. This is our haul index, and tender lead times. All these are brought together here on one page here, and you can compare what's going on. Now, we have some green and red that we see here. We have moderate increase and, of course, moderate decrease, and we have strong increase and strong decrease. What we do on this map here is we measure the average index for a 12-month period. And then we look at the standard deviation of that. And if this index has moved one standard deviation up or down, we'll flag it green or red and say that it's a moderate increase from the average, the 52-week average. If it moves up around 2 standard deviations, we will indicate it as a strong increase or a strong decrease. And this can help you identify quickly which markets are actually moving within the U.S. You can go up and sort by market with the ups and down arrows. I can click it once here. I like clicking it twice because it'll give me the greens and reds first. So here, the Cedar Rapids, Iowa market, it has a strong increase. It has increased 6.95%. This is in the last 24 hours, and it's up to 22.52. But I can also see that volumes have declined slightly down to 14.42. And I can scroll down and I can see moderate increase and on down to moderate decrease. So here we have a lot of markets where tender rejections are starting to pick up. And of course, that's what we expect to see here as we come upon the Thanksgiving holiday next week. You can also sort by tender lead times or the Headhaul Index. Tender lead times I'm going to try to get to here, but tender lead times measure the time between a shipper books a load with a carrier to the time the actual load picks up. So today is Wednesday. If I booked a load that's picking up on Friday at 4 p.m., it's Wednesday at 4 p.m. currently. Then we look at Thursday, Friday. That's a 2-day tender lead time. It's important to understand that tender lead time, this is the reaction of shippers to what's going on in the markets. So we see that outbound tender rejection rates is the reaction of the carriers. This is the reaction of the shippers. And normally when you see capacity tighten up or capacity issues arise, you'll see shippers start pushing tender lead times out. So they'll expand tender lead times. The national average is around 2.5 days. So when you see them climbing up, here, let's look at a few of them. You see a strong increase pushing up to 2.8 days or even to 3.5 days. This is normally a reaction that shippers are seeing issues with capacity. So they're booking their loads sooner to ensure that they're going to have a truck to pick up their load. So it's always good to see if tender rejection rates or tender lead times are increasing. It could be a signal that rates are pushing up in the market as well. And of course, never judge one market by one indice. Always look at two or three different indices to understand what's going on. I look at volumes, look at tender rejection rates. I break it down by dry van or reefer. Measure capacity using the Headhaul Index. And of course, I'll bring up tender lead times to see what the reaction is by shippers if they're pushing tender lead times up or pushing tender lead times down. So that is our most volatile markets map. Let's just go back to, let me open this up here, one of our charts and kind of show you what I'm talking about when I'm looking at tender lead times. I'm going to look at outbound tender lead times, OTLT.DSM. We'll keep the Des Moines market pulled up here. And you see here, we have a peak here that was kind of in the second week of November, and they started to drop back. So this is telling us that shippers were easing up on tender lead times, meaning they weren't having that big of an issue with capacity. And here in the last 24 hours, we see it started to bump back up again. We can also break tender lead times down by dry van or reefer. So I want to bring this up and look at VOTLT.DSM. And you'll see here for dry van, it peaked here again around the beginning of the second week of November, and it's been trending down, and it's down to 2.49 days. So it's right around or just below the average, U.S. average for tender lead times. Let's compare this and look at reefer, ROTLT.DSM. I'm going to take away the dry van so I can see it. Here is one that is at 3.62 days currently. So this is a lot higher than the U.S. average of 2.5 days. You see again that it peaked here in the second week of November. It dropped down, but when it dropped down, it only dropped down to a little right below 3.5 days, and it's moved back up to 3.62 days. So this tender lead time has been elevated for reefer freight leaving the Des Moines market. So this shows us the spot market rates and capacity have been a little bit elevated in this market for reefers. Now we saw the tender rejection rate for reefer was also 30%. So that's very relative to what is going on. Looking at this, I would bring up ROTLT.DSM, and just for fun, might want to compare it to ROTRI.DSM and see what's been going on. We see the tender rejection rate starting to pick up right here, and we see a reaction by the shippers that are tender lead times are being pushed out. So here's the reaction by carriers. They're declining loads and probably moving to the spot market to pick up loads with higher spot market rates. These tender rejection rates are moving up, and we see a turnaround here for tender lead times as well. And all this information here, especially looking here in the last 7 to 10 days, which we saw that was here the 13th, all this information is starting to change from that time period. And that's what we want to look at when we're looking into this information in these markets and diving in deeper to see what is going on by dry van, by reefer, and fully understanding what is going on. We can use a regular US map. We can use a chart. And if we want to, we can also use a tree map, which I have not brought up yet. And I'm going to build a new page and show you what a tree map is. Building a new page, the page comes up blank. To the top right here, the plus sign, select tree map. I'm going to be SONAR tree map, and I'm going to click manage symbols. Now, I'm going to use our top 5 trucking indices, and I'm going to use, let's look at outbound tender volumes. I'm going to click on that, and I'm going to click X market, and then add selected items. And this is all the markets, all 135 markets, and I'm going to bring a tree map up of the outbound tender volume index. Select done. All your markets are listed here. Scroll down and click save. You can bring this map up on outbound tender volumes. You can bring it up on outbound tender rejection rates. You can bring it up on dry-van tender rejection rates, reefer tender rejection rates, and even head haul. And this is a very interesting map. What this does is it shows us the largest markets, which are here in the top left. And as you move to the right and down, these are the smallest markets in the bottom left-hand corner, or the bottom right-hand corner, my bad. We see the largest market right now currently is Atlanta, Georgia. This percentage right here is the percentage of change since the last time this was measured, and we measure tender volumes every 24 hours. So in the last 24-hour period, volumes have declined 1.8% in the Atlanta market. And this bottom number right here, this is the actual value. So 379.56 is the index volumes that we have in the Atlanta market right now. It is colored red because it has declined. If you see a neutral, kind of a bluish gray color right here, that means there's a very, very small increase or decline, or no increase or decline. And of course, if you see green, it means it has increased. So the Ontario market since the day before has increased 1%, and it's up to 340.89 index points. If you're looking for your top 5 markets, they're right here, 379, 340, 325 as we work our way down right here. Elizabeth, New Jersey, 289. So as we work our way down and then back up to the top, you'll see your top 10, top 25 markets. As the boxes get smaller, the markets get smaller, and move over here to the bottom left-hand corner. Our smallest market, Green River, Wyoming, at 0.28 index points, so a little bit less than 1. Miami, Florida, 62.57, and not much change since the day before. So you can use this for tender rejection rates as well. It's a map that I also look at and keep an eye on to understand what are the largest markets. Now also, let's go back to our maps here and look at some of our new features that we brought in. Opening up our map widget here. And scrolling down, we have our predictive rates tool. This was introduced last week. Click on predictive rating tool. You can kind of close your little widget over here. And you can add in your origin. You can either type in the name, such as Atlanta, Georgia, or you can type in the zip code, 374, which is Chattanooga, Tennessee. And the destination, we'll type in Chicago. And submit. Now, what we're doing is we actually built this new rating tool, and we're working off a cost basis, looking at what the cost to a truck should be on a daily basis. And then, of course, we're also bringing in information from our outbound tender volumes, inbound tender volumes, outbound tender rejection rates, and your head haul index and your tender lead times. So we're bringing all this together to create a new type of rating tool. It's information that we have in here is unlike no one else's. We're not copying anybody. We've created our own rating index. So we're still in a little bit of a testing with it, but bring it up and run your lanes through it and see where we're giving a low, a medium range, and a high range. But this is today's rate, not a rate that's a week old. We're also predicting the rate out from 1 week, 1 month, 3 month, and 6 months, even out to 1 full year. And this is what we're showing the rate should be at that time. Very cool new feature. Definitely jump in. It's in the beta map. Jump in and check out our predictive rates. Let me clear out of it here so far. So we've gone through, we've talked about outbound tender volumes. We've talked about, we've brought up inbound tender volumes, which is where the rates go. We looked at the maps, we looked at the charts, and we've broken our outbound tender rejection rates down by dry van and reefer. And we've also dove a little bit into tender lead times. Bringing back up to our charts, let's look at wait times as well. This index is measured monthly. So when you look at the change, you'll see that it's about a month old. And our index here is wait, so WAIT dot, and we'll look at Atlanta, ATL. This measures in minutes. So the 169, that's 169 minutes that a driver is sitting at either a pickup or delivery location in the Atlanta market. So we're measuring on a monthly level. We see where back at the end of May, we were down to around 140 minutes. Now, of course, this is very important. You know, we normally get 2 hours free before detention is charged. That's 120 minutes. So here, since the end of May, we see that average wait times in the Atlanta market have increased from 140 minutes up to almost 170 minutes, which is 2.5, a little bit over 2.5 hours. We can look at this either on a market level. We can compare that to the national level, which is 150 minutes. So Atlanta's 19 minutes above the national average right now. Both the national average and the Atlanta market both trended upwards through June and July, and of course kind of flattened out there through August and September. Using our SONAR map here, we can compare this to the wait times in the Memphis market. Memphis is a little bit different. It picked up here through May and June and then dropped down through the month of July down to a bit less than 140 minutes, and it's currently back up to 143 minutes. So this will help you understand, if you're booking loads in a particular market, you obviously always need to track your freight, but you might want to add a little bit of revenue to your load if you see it's very outrageous tender wait time or average wait times, or you can see if they're very low. It's kind of the probability if your driver is going to be sitting for quite some times, and of course detention is very difficult to collect in many instances unless the shipper, of course, signs the bills in times, out times, but still collecting detention is very difficult. So this lets you kind of know on a market basis whether wait times are increasing or decreasing. All right, so we've gone through, again, tender lead times, wait times. Let's kind of do a quick recap here. Outbound tender volumes. We can look at those on a U.S. map, on a chart level, or even bring up a tree map. It lets us know where the freight is picking up, and of course, inbound tender volumes, where the freight is going. Headhaul Index, that's our outbound tender volumes minus our inbound tender volumes. It can also be brought up on a U.S. map, a chart, or a tree map as well. Outbound tender rejection rates, my favorite index, correlates very closely with your spot market rates relative to the contract rates in a market. You can bring that up with average trailers, which are with the average for all trailer types, which would be dry van, reefer, and flatbed. And you can break that down by dry van and reefer. You can also break that down by lane length as well. Starting out, of course, it's always good to open up and look at the U.S. maps for tender volumes and tender rejection rates, and jump over to most volatile market maps, which will help you identify markets that are moving out of its normal range, to looking for those from a brokerage perspective, looking for those markets that you might be able to bump your rates up. Shippers will be able to know what markets are increasing, which might drive their shipping rates up. And of course, carriers as well, trying to look at the markets that you're picking up in or delivering to that might have some changes that could affect the rates that you're going to be currently running with. Looking at it by the length of haul, of course, you can identify the lanes that are running. Is it a short haul load that's maybe pushing the rates up? Is it the long haul loads, or the mid haul loads actually declining? So they can actually tell you what length of haul is pushing the trends that you see in your tender rejection rates. Tender lead times, the reaction by the shippers. Are the tender lead times expanding? Are they contracting? That should let you know what's going on with capacity from the view of a shipper. And that will let you know if they're seeing, possibly rates increasing or rates decreasing. And of course, your wait times. How long are drivers sitting in a market? Is this a market you should be worried about a driver sitting a long time and possibly detaining your driver and burning up extra hours that they could be driving for pickup or delivery? Do you need to increase your rate because your driver might sit for quite a while? Or maybe should you decrease your rate because it's a market that only has about a 60-minute turnover time? That's all we have here for today. We appreciate you logging in. If you have any questions, please let us know. And you can always contact us at customer success team here at FreightWaves.